Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Kraken Pro. We've got quite a, I think, advantageous promotion to share in this case, Don. I don't know how you feel about this, but usual shills aside, trading competitions are both vastly overrated because it's what every single social media team reaches for and product team. It makes my eyes roll to the back of my head. But as a user, let's just say sometimes these competitions are less populated than you think they would be.
Yes.
Right? That's like the real sort of alpha there. It's one of those like small to medium size account grinds. You can just look for any exchanges from tier 1 to tier 3 running these sorts of competitions, and a lot of the time the actual pool of participants is pretty tiny, and so your odds of winning, even if you participate to some extent, are higher than they would ordinarily be. And that's what's going on at Kraken Pro. They've got the bullion rush, trade gold and silver perps for a share of 20,000 in USDG. It's a 30-day competition, started a day or two ago, and it's just to trade their gold and silver perps. I think you can get a pretty decent stab at that prize pool if you care enough, even with something like a very straightforward strategy in any, you don't have to do wild swings and stuff like that. Like the TLDR for these types of promos is they're probably not as popular as the product people working at the company want them to be, which sucks for them, but for you as the trader, it's actually quite advantageous and interesting.
Yeah.
So that's at least one reason to check out Kraken Pro this week, and the link to this will be in the description. And also, so we don't get fired, right? There's a nice little byproduct here of the show gets to survive, although I can already hear the objections. What point is the show surviving if it disappears for a month at a time anyway? If this is survival, what is death? And to that I say, fuck you. I don't have a good response. Anyway, thank you to Kraken Pro for supporting the show. Check out this gold and silver perps competition, scope it out. There are probably fewer people there than you think, and it's a good opportunity to also just sign up and support the show in general. Don, the chart I've actually started with is Bitcoin Historical Volatility Index from the now defunct RIP BitMEX.
Not yet. Not yet.
Not yet. There's still time.
Yeah, it's 2 weeks, I think, and then they close down.
I think BitMEX for both of us holds a sort of special place in our heart, right?
Yeah.
And the reason for that is we all sort of started off, at least this group, and much of our cohort started off trading around 2017 in that bull market. And the way we sort of, and traded as a misnomer for whatever the fuck we were doing. But, we would trade on primarily what? Bittrex, Poloniex, those types of exchanges. You would trade alt BTC pairs, or the whole up in US Cryptopia. Yeah, still waiting there. You would trade alt BTC pairs. There were no linear USD perps or futures. It was either like, oh, I'm tethered up, or you're long like every single altcoin under the sun. And the up in USD meme comes from the fact that there were no native USD pairs. And so if you bought a altcoin and it was down against Bitcoin on its alt BTC pair because Bitcoin went up, you would say that you're up in USD even though you haven't made more BTC and you're underperforming, which was kind of the point. And that sort of established a very interesting culture in terms of how people view altcoins, which is something we lost, I think, in the linear futures perpification era, which had its own benefits. But at the time, if you were to speak to any reasonable person, because of the way the market structure was set up, where everything was denominated in BTC, and that's kind of realistically the only way, that's your benchmark, that's what you would use to cash out, etc. The prevailing wisdom among all the old heads and the participants at the time was altcoins exist as a vehicle to make you more BTC. And that is obviously no longer the case. People don't view it that way. But that was sort of the meta. And then the way this ties back to BitMEX is after everything crashed and died and those exchanges basically went to zero in terms of volume, all the coins there went to zero, etc. Then there was a question of what the fuck do I trade, right? And naturally the answer for low sophistication first market cycle crypto altcoin punters was perpetual futures with leverage. I mean, that is the natural transition, right? From not knowing what the fuck you're doing and just buying random coins on Bittrex on your phone. What you should then go do is highly leveraged perpetual futures that no one really understood at the time. And some would argue still don't. Like if you were to ask 2018 me what a funding rate was, I don't think I'd even guess at an answer. I just wouldn't have any idea. And this whole like index and last mark, or all these perp mechanics, even liquidations and how leverage works, were completely unknown to the users at the time. And you sort of compound that or pair it with absolutely abysmal market conditions into 2018, and you have what is the sort of mental asylum that created this 2017 generation of traders. Some would say that we're still suffering from that today. I think those people are correct, objectively speaking. Just to sort of
Probably,
get
yeah.
across the level of sophistication, I remember I used to think that if I would open a position with like 1x leverage or 2x, and then the second it would start going in my favor, I would move the slider to 100x. That would be 100x amplifying my returns. That is
There's
that
some genius level stuff.
that is. I'm like, why is everyone not doing this? These people are insane. And that was my first, probably longer than a month of trading on BitMEX. So yeah, the BitMEX meat grinder with its low volatility, order submission error, terrible market regime accompanying it was certainly a battleground where a lot of memories and mental scars and prescriptions as a result were forged. So RIP BitMEX, pour one out. I will never forgive you or myself for the amount of BTC I lost on there. I don't know if you've done this exercise, Don, of you sort of mentally know how much Bitcoin you either made or lost, or periodically, some big trades that you donated to the BitMEX insurance fund. And then when BTC is over 100K, makes the mental maths very easy and also very depressing. I've unfortunately
Yeah.
gone through that exercise and it wasn't fun, but that's the TLDR
Yeah.
there, RIP.
I have done that before, but I had a bunch of accounts, so like and that made it so that I just started losing track of how much I was losing. I did have like BitMEX. I think was like not the best for me generally trading wise. I don't think for anyone really. I did trade on this at the same time on Bitfinex back in the day, and that was much better. Um, which is as in like not necessarily the trading environment, just the results of what happened. I think BitMEX just offering too much leverage to people that haven't really done that before wasn't necessarily the best for most people. Good times though.
Yeah, for sure. And also, like, it was a totally different class of perp trading because inverse contracts were the main thing there. So again, it's sort of denominated in BTC, which was a weird one. And then they had these Quanto swaps. Do you remember those? Oh my God.
Oh yeah, I mean those are my favorites. Like I mean
Yeah, I
the
remember you
E.
paying a house in funding for your ETH one.
Yeah,
Was that part your favorite?
yeah. I mean the funding fees were incredible, but also I got to buy like ETH on like stupid leverage at like 2-digit prices, and then I didn't even know, but like, well, I didn't fully understand it, but I bought ETH. I still remember, and I was like, oh, if this goes to like the good old math that you used to do, I was like, oh, if this goes to like 100, 150, I'm gonna make this amount of money, and it went to 100, 150, and given the contract got worth more when prices went up, um, the number was like twice as much as I thought it was gonna be, which made it like a really really good trade that I thought was like already really degen, made it much worse because if it would have gone down, the contract would have lost in value as well. So I was risking more than I knew in an already over risked trade, and then I got lucky, got bailed out by prices just going up infinite, making it one of my better trades of the career. Like that one was like BitMEX's saving grace because yeah, that one I think must have, I don't quite remember, but must have pushed me in quite positive territory on the BitMEX front
It only takes
generally.
one, the famous
Yeah,
gambler's motto.
yeah, the good old ETH trade. That
Yeah.
one is still like this was one of the trades that I will never forget. And in parts to just me being too stupid to figure out that I was long much more than I thought I was.
Yeah. No, that's funny. And
Yeah,
that's the thing, right? You would get like, especially to the downside, the convexity was insane because
yeah,
these were BTC denominated in BTC margin contracts. So people were using BTC to long BTC. And so you can imagine when BTC would go down, people's positions were less collateralized and deteriorating at the same time as prices going against them. So you would get these like very obvious walks up, and then you'd set off one liquidation and then the whole thing just fucking collapses. That's where a lot of this, I mean, part of it was market conditions and market regime, but that's where a lot of this sort of BART type price action that we refer to now comes from. You just had the most sort of positional directional market ever, all stacking, leverage cubed, and one guy would sneeze and everyone else would end up shitting themselves, which is always fun.
Yeah.
But yeah, good times. Pull one out. That does leave us with this current BTC historical volatility index, and I don't know if you've noticed it's fucking low. Like looking at the weekly chart, I remember in about 1986 we talked about the 65.8k underside weekly retest. Guess what, buddy? We're still there.
Still there.
Still there. Literally nothing has changed. So perhaps our absence, and I say our because it's obviously both of us, right? It wasn't just me. Our absence can be forgiven given the context and market conditions. On that note, I sort of made a shit post about this the other day, but a sort of emerging narrative, increasingly so, has been this idea of relative strength through lack of weakness, right? Like, oh, look, stocks were flirting with their lows and the parts of the memory trade and the AI trade got blown up. Saylor, increased his USD reserves. Which is a hilarious term, right? When you dump BTC. Yeah, it's like, no, sorry, I'm not dumping on your head. I'm rebalancing your portfolio. There's so many clever ways to frame that. But the basic argument is there's been this barrage of bad news, bad correlations, Iran stuff, etc., macro, like all the Fed, all this stuff is terrible. But BTC is still here. I'm generally sympathetic to those types of arguments, but it's sort of, there needs to be a second half to the equation, right? Where the thing actually goes up and someone buys it after absorbing all the sellers. And that's the piece we've been missing. I think ever since we sort of landed on this monthly support, right? At least for 2 months, it's been the case that, wow, things are actually pretty terrible. And if BTC manages to hold this, boy, will that be a signal? And it's like, okay, well, it's been a couple of months now. Is it going to go up? The S&P made a new high, right? It went from flirting to its range low to breaking out. NASDAQ also recovered, etc. So I'm wondering, from your point of view, where does that transition sit from, a sort of confident, this is relative strength, it'll pan out, it's good that we're absorbing this, versus, okay, well, we've had a lot of relative strength via lack of weakness, but no one's fucking buying this thing, and what does that mean?
Yeah, I mean, we did have like a lot of strength when everything was weak, but also like in relative terms, but also like now the S&P is up infinite again, and we're still at 65. So I'd argue like it's kind of wash. Like we it's just not trading much. Like it's not going up much. It's not going down much. So it's just like, if you're fully brutally honest with yourself, I don't think there's much relative strength or weakness in the market right now. It's just a piece of shit. And that's fine. Sometimes that's just how it is. And I think the moment it starts moving above 65, 65.6, the level we've talked about, we might start seeing some actual relative strength. But until then, it's just like it's hanging around the lows, and being is strong when the market, like when the rest is weak, but it's also, like you said, unwilling to go up when the rest is strong. So yeah, I don't know. I don't necessarily think the relative strength argument is the strongest anymore. I just generally like it where it is right now.
Yeah.
But that just could be me coping. But I look at it and I'm like, oh, this reminds me of prior times when we were kind of like at more significant bottoms. Like with every passing week, a little bit more so. But also, like, maybe I'm just washed and mistaking information as something that is just not there. I don't know.
Possible.
Yeah, but I kind of like it. I like it where it is. I like generally the idea of it going up from where it is right now. I like it better. Like I was like kind of like more excited about 45k for the longest time. Like when we're trading at 70, whatever, I was like, this would be so cool to buy at 45. Like with more and more time spent, I kind of feel like it just makes sense to go up from here. But that's just kind of my personal opinion. I don't really have much in terms of the chart to support it, other than the monthly chart, which is quite all right-ish. So
Yeah, that monthly is basically 60K. Your good old cluster, the one that's been spoken about ad nauseam. I think the way I view this is the sort of bet has changed to some extent, where the bet used to be, sellers run out of coins and number go up, and that's the sort of relative strength argument. I think it's sort of changing more towards volatility death is followed by volatility expansion, and then you make a bet as to whether it's to the upside or to the downside, right? And given monthly support and whatever else, you can make a bet that it's to the upside or use the weekly trigger or whatever else. Because I think that's the sort of the more intellectually honest read when the market both fails to respond to upside and downside headlines, and just in general is a bit anemic and non-responsive. Like if there were latent buyers in the market or some sense of urgency, the relative strength argument tends to resolve a bit more quickly, right? Because then the sellers run out of coins, and then you give the market any half excuse to go up, and it will take it, because those coins have changed hands. But if you have the coins changing hands and then it doesn't go up, and hey, it's actually been pinned in the same range for 2 months or whatever, I think you can still make the same argument in terms of what exposure to have to it, but the shape, I think, becomes volatility based as opposed to relative strength based. It's one of those like, hey, historically, when BTC vol reaches this threshold, within this threshold, it tends to move n amount, right? Something like that. And again, you could just fucking dump this into a moderately smart AI with a couple of CSVs, and it can do this for you and sort of shape this bet. And then be like, okay, well, maybe I'll use options, or maybe I will just get like some perp exposure, or use this to rebalance my spot portfolio, or whatever else. So unless you believe in like true volatility death, I mean, realistically, what's the decision surface, right? If volatility expands to the downside, you kind of have to buy it, because like if whatever downside moves comes from vol expansion isn't the bottom, then we just die forever. And that's where you get into your DonAlt's deep dark fantasy 40K BTC area. And if you're not buying that, then I mean, why do you have this on your watch list, essentially? Like, why bother with crypto at all? And then the upside scenario is sort of like, yeah, I survived the death, and now I don't know how high it'll go. Is it a new high? Is it a new cycle? Whatever, post-summer drift. But time for, there'll be a move to ride, essentially. I think that's sort of the shape of the bet, but I don't want to sort of insult our audience by doing more technical stuff on a chart that hasn't moved for about 10 weeks. It's the same sort of monthly-ish round number 60 as your flagship support / the one that's above the depressing cataclysmic levels, and then you've got a sort of intermediate trigger at 65K, which would be the first weekly timeframe evidence of anything being reclaimed, and I think the rest is a wash, to be completely honest with you.
Yeah, I agree. There's one thing that I've been kind of looking at on the monthly, and this is why I earlier mentioned that this reminds me of prior bottoms in a way. And that is like you have that low in February 26th, right? As in like a couple of months ago. This is all on the monthly chart. And then you have the recent low, right? Undercutting that wick, or like getting into like making a new low on the closing basis, but still respecting the support, right? And when you go back all the way to 2020, and obviously like COVID and whatever, like wild price action, but we kind of had like the same thing where we had like a really, really obvious support in 6K, right? Like if you draw like your candle from like 6.3, 6.4 ish, like a support, that was our range low back then. And you kind of look at how it traded in 2019, like the December, like it wicked into that level and then it traded higher, but then it kind of traded back into that support, respected it on a closing basis, and then went up. And that's kind of like the same-ish formation, obviously disregarding the entire COVID wick that we got, but it's kind of like the same formation that we're getting right now. Doesn't have to play out the same way, but that's kind of like where, like, what this reminds me of a little bit. We just would need to see the expansion to the upside to confirm it as like a major bottom. As long as we don't get that, that's just like wishful thinking, but at least it kind of reminds me of how we traded back there on a closing basis. I kind of like that setup generally when you wick into support and then you run back to it to close at it. Something I talked about the first time we actually got to this support, that like these kind of supports attract price on a closing basis. Like if you don't close at it, there's a chance that it comes back and does so later down the line. And that's kind of what we've done. So now we just need like a little bit more upside to confirm all of that, and then it starts looking really good. But we do need some buyers to step in, and so far we haven't found too much.
Our main buyer turned into a seller.
Yeah, but price hasn't gone down, even though he has, which I find quite like people are every time he announces a sell, price goes up after, because people are like, oh fuck yeah, like less Saylor. He sells like minimal amounts in comparison to what he's holding, like so it's not really like a big impact, but I find the reaction quite funny. Like it's pretty clear that people are sick and tired of Saylor generally. There's only a few handful of people left that kind of support what he's been doing lately.
Yeah, no, I think that's very fair. But it's fine. He's on a podcast tour, Don. That'll fix everything. Yeah,
I wish he wasn't. Like, there's no worse person to promote crypto, I think. Like,
well,
and
Bitcoin,
I mean, this might,
to be precise, right?
yeah, Bitcoin, yeah, because it's just like that guy just seemed like, to me, I look at it and I'm in the crypto space, and it just kind of, he just seems like a drugged up lunatic to me when I watch his stuff and I'm in crypto. So I can only imagine what it looks like to people that are not in crypto. But I don't know if that's just me or not. But I'm just kind of like, I cannot take this serious.
Yeah, I mean, the spokespeople, ironically, some of the best spokespeople for Bitcoin have become like the institutional guys, you know? And all these wealth, Franklin Templeton, all these like sort of wealth managers and legendary traders, who make a bit more of a reasonable, sober case. Because other than that, you either have Michael Saylor, which, you know, res ipsa loquitur type of thing. And then for on the ideological side, you have people shilling you cold cards, and like the hardcore maxi, so-called, you know, Austrian school of economics pseudo intellectualism. So it's very much a narrow church in that regard. I think the 6K analogy is a very interesting one. God, I remember how fucking terribly I traded the sort of other half of it. Like I definitely remember doing okay sort of around 6K and towards the bottom sort of 20-30% of the wick, but on the way up I was just fudding myself at every single turn. I don't know if you remember that shit, but I was like, 10K is this big monthly resistance level, oh my god, 14K is this like highest monthly close, and the market just did not give a shit. I think where I started to sober up was when 10.7 was like flipped to monthly support after being monthly resistance. I think I may still have been fucking bear pilled at that point. Yeah. But that sort of climb, those 6 months from wick to close to breakout, and the crazy move that followed, basically from, you know, what is it, like 10 to 60? Getting there was such a pain in the ass. I did not do a good job around that time. I don't know how you remember that period.
No, yeah, I mean, that is like, ever since I've been quite fortunate that I've got most of the big market moves right during this, like when you zoom out, I'm
humble
like,
brag.
usually I'm on the right side of this thing. Just like I've gotten lucky. I've got in it in a really good time. And then got enough experience to kind of be able to handle all of this. But I would say that and I did really, really well buying the bottom of the COVID crash. I was just like, this is over. Let's buy some. It's just like, if it goes to zero, like, oh well, we're all fucked. And that worked out really well. But then like the recovery after is, I think, in my opinion, the worst I've traded crypto. Just generally, full stop. I gave back like a good chunk of the extra month, like the extra risk that I took from free, like from 3 to 4K, like the bottom that I got to buy on the way towards like 14K. And I coped and was like, I think like this has to take like a little bit longer to go up, and it took me forever to be like, okay, nah, I'm just
Yeah,
wrong.
man.
A lot of expensive lessons learned. I gave back a lot of the bottom buy profits that I made for no reason whatsoever. So like I would say that like that's legit the worst trading I've done in my entire career in that move.
Yeah, dude, it was terrible. I think I'm
Which is
in a
quite
very
funny to
similar
look at.
boat.
Yeah, like when you look back at it, it seems like such a clear move. It's not
Yeah.
really like it's like you look at the monthly chart, you're like, how the fuck
How
are
do you
you
fuck this
getting this
up?
wrong? Like this is so clear. But back then I was just like, yeah, like this COVID thing, like we are fucked. And I mean that taught me a lot of lessons market wise. Like the whole doomer thing is, I mean, even if it's a reasonable assumption, like it's so easy to get infected, and it's so easy to kind of like just stick with it even though the market is telling you otherwise. And you can be right for a little bit, but you shouldn't be stuck on that for too long. Like I was like, oh, the market is gonna go down with COVID, and that was right. And then I was like, I'll buy this because it's dead, but it's gonna go back to being dead soon. And then it just never went back to being dead. But yeah, kind of like that. Where we are right now, it's quite easy to be a doomer. Same kind of like situation. I feel like people are very, very pessimistic about a lot of things, and then they have a lot of risk on in other things. So I would like if it played out the same way. I don't think it's gonna like obviously do like 10 to 60K again. We're way too high up for that to happen. But I would like a slow push into resistance and then like a nice pop. That'd be nice. And we are kind of setting up for it similarly. It's just a question of if we're gonna be like if the market's going to be nice enough to get it, especially since like we talked about, like Saylor selling, optimism about crypto generally is much worse than what it was back then. Like we were all believing in crypto back in 2020. I think even the most hardened crypto veterans are starting to kind of lose faith, even though price is much higher, just because of all the shit that's been happening and all the grifting that's been happening in the last couple of years.
Yeah, I think that's completely fair. It's very hard to be ideological in these conditions, despite the price of. And again, in terms of how things have done, it is still a very sort of constrained story from the stuff that's stuck around, and then the stuff that you don't see that hasn't stuck around but extracted, hundreds of millions of dollars. That's truly the scary stuff. And yeah, the grift cycle just getting very fatiguing, especially when it's done on the presidential level.
Yeah.
Not great. And crypto's been around. I mean, we could say roughly well over a decade, in roughly the shape that we know it. And the number of like investable assets net is what, like 10, fewer than 10.
Yeah, I think 10 is quite
10
the
is
large number.
10 is generous. And
Yeah.
realistically, you have like Bitcoin, which is ETF institutional plus really Saylor, and then everything else sort of becoming a distant second. ETH going through its own sort of relevance and governance troubles. Solana doing super well on usage, but again, in terms of like home of grifting, and you sort of work your way down the list, and a lot of the fundamental things are still very broken. Like, if you were to look through CoinGecko or whatever, most of the largest assets by market cap are useless governance tokens and or ghost chains or some combination thereof, which is unfortunate. So even if you were to proxy by size to say, okay, well, the top 10 most investable are the top 10, you would be wrong. And so that kind of shit makes it very difficult. I also think the anecdote that it wasn't an anecdote, it's a painful recollection of history. And I also just like traded like shit around that time. You sort of do well at the lows and then you sort of give most of it back, right? At which point the question is, why the fuck am I buying the lows? And I think that's a very interesting lesson there. There are 100% large groups of people who are like, I will just buy whenever I see the headline that, unintentionally or not, I will buy when I see the headline that Bitcoin has made a new high. And they kick the shit out of us, right? Because
Yeah.
rather than sort of suffering through this that's an alarm. Rather than suffering through this like 6 to 10k transition, they just kind of bought what 14 plus or even 20 plus, and then got like a nice 3x with literally zero drawdown that's visible.
Yeah.
As
Just
opposed,
chilling.
just chilling, bro. Yeah. So that's why I think, at least in part, among many other reasons, just LARPing, why the romanticization of sort of always sniping the bottom is just so misplaced and overrated, because it really matters what you do after buying the bottom. Like, how long does it take between you buying the bottom and then the market actually moving? What kind of mental state are you in, and what is your risk posture, and what kind of position does it put you into to manage the volatility that comes after? And part of it is just like pure psychological slash mental anchoring, right? Like, I remember buying the 6k nuke and then just sitting there, buying it too early at that 4.4 4.6 cluster, and then just sitting there for like 3-4 months being like, oh, I'm very underwater. And then as soon as it starts going up, you feel some air start to repopulate your lungs, and you're like, okay, just get me out of this position, like, I'm sorry. Like, I'll never do that shit again. Is my entry resistance, like, all those things which affect your trade management and your ability to actually hold these positions. There's a real cost to attempting bottom buys, and especially if you're early and there's an extra sort of 2-3-4 months tacked on top, it's really rough to, certainly compared to someone who just buys the breakout and holds it. Like, the trade management piece is very different. In hindsight, I wish I had a slightly more sort of abstracted and bigger picture understanding of like what market, and this is something I've shit posted about before as well. It's like, what market effect am I trading, right? It's like, okay, well, I'm essentially trading volatility expansion, and I think we're gonna enter trend. And so what that means is I fucking hold. You don't trade the 4-hour support resistance level if you're trading sort of monthly volatility expansion or super high time frame vol plus trend. You just fucking hold it. Or even like, without looking at market effects, like, what am I in here for? Okay, well, I think it's really low, and I think because of there's going to be another cycle. It's going to go really high, ideally up to the all-time high and through it, and just that alone can save you so much. Whereas I think historically, certainly in this sort of 2018 to early 2020 era, most of my fuck ups can be attributed to this type of like epistemological flip-flopping, where I'm like, this is a monthly, but I'm going to trade the 4-hour as well. Oh, but there's a resistance level, let me manage it. Like, just not having a clear sense of what market effect am I trying to monetize, and what is the shape of the trade that I'm taking, bigger picture. This whole like loose, no, it's not even a loose thesis, it's just this like wishy-washy understanding of the type of risk I'm taking, and for the type of move that would warrant it. I think you just want to be a trader every single day, so you take a monthly and then jump into your intradays and go back and forth. And I think that's what really the generic zoom out advice is trying to convey. It's not that higher time frames always better. I mean, to some extent that can be true, but I think it's more like, hey, remember why the fuck you're in this trade and why you have the risk posture that you have and what you expect to happen, and as opposed to letting these short-term deviations drive you fucking crazy. And I think for that period, for me, that you could attribute most of my fuck ups exactly to that practice, in one form or another.
Yeah, well said. I think generally, like, just taking too much risk can easily also just derail your entire plan, because then you go from having that like high time frame plan to just stressing about the numbers. Because like, when you take a lot of risk around high time frame levels, yes, there's more likelihood that you're gonna hit it, but also the moves are gonna just spook you out, because around those high time frame levels the market just moves bigger than you might otherwise think. And then you just like, oh shit, I'm up this much already, and the price is up 5%, and you're like, oh, I'm gonna close now. Or like, price is down like 5%, you're like, that's much more than I'm usually down, because I usually trade lower time frames. Let me just call this a wash and get out, even though it's not invalidated anything. So like, there's like a bunch of stuff playing into the how to fuck up like a high time frame idea. And like, it's all like taking too much risk or over management. Usually, like, those are the two that break most people's trading.
Yes, it's very hard to come back from as well, especially if you fuck up like a big opportunity and you know exactly why you did it. you might think the default is, well, now that I've learned, I'm never going to do it again. But at least in my experience, that's not how it works. It kind of just like more permanently changes how you approach these things, and not always in the best way. I definitely agree on the sizing piece. You can have the best plan, and then you see your P&L move, 10 times more than you're used to every tick, and you just start fucking freaking out. And then a similar bucket to this, which I think would have saved me a lot of heartache. And the interesting theme here is that these are like principles and sort of understanding and decomposing trading. And once you have those, like the downstream stuff is pretty easy to manage. But if you don't have those, then you're sort of a slave to everything, even, your unknown unknowns. But the second thing is volatility adjusted sizing, right? I don't know how many times you've done this, but I remember whenever we'd have these like massive downside moves where the market would, huge liquidation cascade, market would go completely fucking illiquid. And so any buying or any selling just like all being fired into an empty book, and the market was whipsawing like crazy. Those had some of the best fucking scalping opportunities ever, right? You can catch like a 10-20% mean reversion within an hour. And that can sort of make a quarter and present huge opportunities in general. But oftentimes, those types of vol expansions happen after a period of pretty compressed volatility. So
Yeah.
where I would catch myself naturally and get fucked over is that I would get used, and again, from a framework perspective, I would be sizing for a low volatility mean reversion regime. Regime shifts to high volatility and shit breaks and the markets are liquid, etc. And I'm still using the same fucking sizing as I was, before that happened. And so suddenly, I'm inputting the same numbers into the order form, whatever your muscle memory develops at that point into, oh yeah, for an intraday punt, this is roughly my sizing and this is roughly my invalidation. Well, now both your invalidation and your sizing and your volatility sort of reference point are all wrong. And that starts fucking with your head too, because typically for me it was oversizing into those things, not expecting the market to move that much. So it's like, oh, I'd normally draw down 2-3%, and that's sort of the MAE or whatever. Like I'm used to this type of loss threshold, but then you sort of scale in. First of all, you get slipped a lot more because the markets are liquid, and then it fucking moves down 5% because the markets are liquid. And I'm like, oh, I'm not used to my P&L looking like this, and it fucks up your management all the same way. So like volatility adjusted sizing is just, right now, if I had to sort of not teach someone how to trade, but at least build a framework or set of principles, that would be like towards the top. And not having that, because certainly fucked me, especially in those opportunities where it's one of those free money on the ground type of things. Everything is broken. If your sizing is wrong, then everything becomes 10 times harder, and I've definitely fallen victim to that a shitload.
Yeah. And you might think that but the sizing, like if you size too big and it goes in your favor, then like it kind of cancels each other out, right? You're like, oh yeah, I'd lose more, but I also gain more. But the funny thing is you don't, because if you gain, like we talked about, like if the P&L is much greener than you usually have it, you're gonna do something dumb with it, which then makes it like that the size doesn't really benefit you on the way up if you're right, but it also doesn't really benefit you, like you get doubly fucked on the way down. So you're kind of like in this lose-lose situation, which is like, it's just funny how the human mind works, because you'd think like, hey, this guy's just risking more, so like if it goes well, that's gonna be especially good. But nope, like when it goes well and you have too much size on, you're also gonna do something stupid most of the time. Like sometimes you get lucky, like I did with ETH back in the day. And then you're cognizant enough. Like I was so bullish that I was like, I'll just like this is stupid, but I will not forgive myself if I close it. But that's a rare occurrence. Usually it's like you have like this great plan, you plan everything out, and then your P&L screen, you're like, okay, I'll close this and then open like a more reasonable sized position, like at support again. And then that's just a free trade, whatever. You do something stupid like that, you lose your position. The market goes from 10K to 60K, and you're like, fuck. And that stuff happens all the time to people. And the funny thing is, after something like that, I've seen a lot of people just rate shorting, because they're like, I didn't make money on the way up, even though I knew it was going to go up. Now I think it's going to pull back. So I'm going to short, make that money back that I'm owed by the market, and then I'm going to get back on it. Seen that so many times, and people just get completely
100%.
carried out. And they're like, big time frame, super bullish, and then that just carried out because they shorted like the worst setup on planet Earth after having like a really good long setup. The same is obviously true for the inverse, right? Like you're bearish at the top, and like the same thing can happen. But yeah, it's just interesting trading lessons that you just
Oh,
learn
for
over the
sure.
years.
That's a big one. The one you mentioned is sort of, I think it breaks into two things, right? First is using leverage as a catch-up tool, and then the second is sort of punishing yourself for missed opportunities, both of which are terrible ideas and will have a very negative impact on your career P&L. Do you remember at one point on crypto Twitter there was this practice of like, I'm gonna scalp short while I'm long for this like
Yeah.
tiny pullback, and like that was just like one of the dumbest things I've ever seen. And the way it's sort of come up in my trading is I just sort of I don't know where I fully fall on this, but like the basic idea is I sort of look at some of these high time frame moves and I can basically remember what I did for all of them looking at the monthly, right?
Yeah.
And dude, there aren't that many trades here. You know, like in a 9-year career, there really aren't that, at least on the BTC side, there aren't that many trades that are going to make your year or make up your P&L on the whole. And I just wonder, like, I sort of half wish I spent so much less time just trading bullshit, you know, stuff that's fucking invisible on this chart. The counter argument there is like, well, you know, that's you're kind of sharpening the blade, and you need to stay in tune with the market. And I think there's some amount of truth there. Where I think it stops being true is if those so-called blade sharpening trades end up fucking with your execution and management of those big picture ideas. And I think I definitely fell into that bucket quite a few times, increasingly less as time went on. But early on, I couldn't fucking hold a high time frame trade to save my life because I would then over-index on the next 4-hour or daily time frame level, you know, 5% above it. And that's just like an obvious compatibility issue. Like I either believe the monthly time frame trade is going to hold and is worth risking, and I clearly did believe that because I took the fucking risk, in which case by definition I cannot consistently let myself be swayed by these intraday lower time frame types of rotations. And I think that type of behavior just made it really fucking tricky to consistently catch these monthly things, because you then build a pattern of, oh, okay, even if I'm buying the monthly, I'm still sort of managing it on lower time frames. Now you can avoid that entirely by saying, if I'm trading the monthly, I'm only looking at the monthly, and I think that's a pretty good spot for most people to start. But then there's basically, you know, scope creep finds a way where you're like, okay, well, I'm managing on the weekly, but I can take a peek at the daily, you know, like maybe the daily will tell me some secret, and then you're like, well, you know, the daily's only once a day, but this 4-hour is pretty interesting. And then suddenly you've gone from a monthly time frame just through pure sort of you know, lack of guardrails plus scope creep plus boredom. You've gone from a monthly time frame trade where thing goes from A monthly to B monthly. Suddenly you're on the 1-hour chart because there's some failed breakout taking place, which again, 1 week, 1 month, 1 year later is just going to be completely invisible and most likely shouldn't affect your trade whatsoever. But it's so fucking easy and tempting to find a reason to trade and sort of sabotage your own idea. And I think just looking at this monthly chart has sort of made me reflect on that. Just, you know, I've done the exercise before. I don't know if you've done this, where I've looked at a high time frame rotation from like, you know, a couple of rotations ago, and then I look at my trade history for that period. It's like there should be like a small handful of trades there in that period if it were executed correctly, and then I look at the actual trade history and it's like some sort of fucking grid bot that's misconfigured, even though it was all manual click trading. And it's just one of those like, what the fuck am I actually doing here? And I think it came from all the things I mentioned, like sort of boredom and temptation and lack of guardrails, etc. But all of these things that we've been hammering on about, at least to me, I don't know what your take is, but for me it just came from a very like bottoms up as opposed to top down understanding of trading and a trading system. And it would just, you know, to use AI terms, I would just sort of pollute the context window with all this like low time frame intraday slop, and then just lose fucking sight of why am I taking this amount of risk? Because if you were to tell me, hey, this is your position size, what do you think the trade is? I'd say, oh, well, this must be some sort of fucking, you know, mostly spot or spot margin oriented or very clear invalidation perp high time frame shove. And that would be correct. But if you were to give me the same risk posture and say, oh yeah, you're here using like the hourly time frame to manage this, I'm like, oh my god, either I'm like a deca-billionaire or something's gone terribly wrong, because like this type of trade management is not commensurate with the amount of risk taken here. And those types of like both duration and risk mismatches are what fucked up a lot of these high time frame moves for me historically. And I just think it can be traced back to not having like a proper top-down framework and principled understanding with guardrails of what the fuck I'm doing. I'm wondering in your case how you sort of, upon reflection, view those types of periods. I mean, certainly the 2020 grind, but I'm sure there have been other periods where you're like, I was right 3 months ago. What the fuck am I doing here managing this thing? What do you think the underlying cause there is?
I feel like I've always been kind of like good with the from high to low time frame thing. The one thing that I'm not good at, like there's like I have different problems from yours, which is basically like I always close my trades too early, even though I'm like, oh yeah, this is probably still gonna keep going, but I kind of feel like the trade of of this cycle is kind of done. Like I've made enough. Like I look at the P&L, I'm like, okay, this is enough. I can just chill now. And then like the market goes up another 2x, and I'm like, that was stupid. I kind of figured it would go that high, but I was like, okay, this is enough. Like so, there's like, and I don't know like how to even like what that even is. Like a lack of greed, a lack of kind of like sticking to my plan. I don't know, but I always close my trades too early. But I usually stick with them at least for a while from the get go. So I don't have the problem of okay, I'm closing because of lower time frames. I'm most of the time too lazy to, and have been just historically just keep letting stuff run. But I do close it at some point way before my actual target. I mean, you do remember these talks that we had where I'm like, okay,
Yes.
I'm targeting like at 16K when we're talking. I'm like, I'm targeting 100K, and everyone's like, you fucking moron. And I'm like, that's kind of like that's kind of like makes a lot of sense to me. After all of this to go like proper high, and then I end up selling at like 40K, and I have to chase at like 50 because I'm like, oh shit, like that was stupid. Like, why did I close at 40 when I'm targeting 100? So that's kind of like been for me the story of the game, where like in all of these moves, like oftentimes I get them right, but like somewhere halfway through, I'm like, okay, this is like I'm like this is too much, and then I close it and I have to chase it a little bit higher. Um, for the next leg, or sometimes sit out the entire leg and wait for the next cycle, which
Yeah.
is fine by me. But there's something where it'd be like from like a professional trader's perspective, like that's my biggest flaw. Like that, I just at some point I'm like, okay, this has been enough. Like I don't give a shit anymore.
Yeah, I was gonna
And then
ask, like, what do you think the cause of that is? Is it sizing related? Is it like a time apathy type of thing where you're like, I've spent enough time in this trade? Is it generally being a bit jittery? Is it a previous experience that sort of fucked you up where you overheld it?
no, it's just I think it's just like basically I've like, and this is like the dumbest thing that I'm ever gonna say, but I kind of feel like I've proven my point. Like I'm like
Oh
because I
yeah,
get
you're
like
right. That
very
is dumb.
yeah, like it's the dumbest thing ever, but I kind of feel like that's where it comes from. I'm like, I'm buying 16K. I'm like, you guys are all fucking morons. And then it runs to 40. And I'm like, see, like you guys have been like this is fucking stupid, like you were stupid. And now, like whatever, like I've proved my point. I can do whatever I want
I
now.
mean, that's
Um,
ego based then, right?
yeah. I mean, it's probably like an ego thing more so than anything else. It is obviously like I'm kind of like also the number where I'm like, okay, this is just getting uncomfortable if I round trip it. Like this is the work of kind of like one whole cycle, and I'm kind of happy with this result, and I wouldn't be happy if I round tripped it. So it's kind of like a mixture of both. Like I'm like
Yeah,
legit. It's a feeling of okay, this is enough,
that's
and I
funny.
wouldn't be happy. I wouldn't be happy with giving it back.
So it's like a mix of ego and P&L, right? Both of which are
Yeah.
like not trading related whatsoever,
Yeah.
which is quite
But
funny.
the funny thing is that I think if I didn't have that, where I'm like, okay, this is enough, I would have probably gotten run over like much more in my trading career. Um, like oftentimes I'm like, okay, it's enough now. And then I close, and then the market trades significantly lower than where I closed it afterwards. Anyway, it might go up like a 2x after, but then it goes down like 70-80%. So it's kind of like it's protected me a bunch from the wild swings that happen in crypto, but also my upside is much more capped than other people's. Like you see some people, they just run it up like 10,000x in a cycle. That would never be me. But also those same people lose 99% of their portfolio, and I don't even get close. Like there's not been a bear market where I've gotten like completely wrecked. Usually I'm doing just fine. Like even after like a 50% drawdown, I'm down barely anything. But also like during the run-ups, I'm the one that underperforms, even though I had the right idea from the get-go. It's kind of like how it's been for me every single cycle. Like I see people argue with me that it's bearish, and I'm like, nah, that's bullish. And at the end of the move that I correctly predicted from the bottom, they probably made percentage-wise more than I did, even though like they were disagreeing at the bottom. But then they also disagree at the top that it's not the top, and then they give it all back. So it's kind of like it's a weird one. But I don't think that's necessarily something anyone should be copying, because it's just not good trading. It's a flaw of mine, most definitely.
Yeah, I mean, the interesting pieces there is like, it is a manifestation of ego, I think, but like a very weird one, right? Because typically the way ego manifests itself is in the opposite direction, where you're like, I was so right, I'm going to keep holding this past my target, you know? Or the market is so wrong that I'm going to keep averaging in. Whereas yours is like a earlier threshold on the other end of the spectrum of point proven ego, as opposed to being something technical or trade related, etc., which is interesting. The P&L piece makes sense to me. It's a form of P&L trading. But I think that can be sort of decomposed into two sort of common behaviors. The first is just like you look at the P&L and you're like, this is enough money for this cycle, whatever, which is a form of P&L trading. But the other one is, and I think this is something that we've spoken about before when sort of discussing these high time frame ideas, you have a very low fucking tolerance for open P&L drawdown. Like once you open, like that's sort of, and I think it sort of maps to what you've said here. Like you try to trade at the inflection points, and and when it gets to like, a lot of the time it's not the first level of resistance, that's the one you tend to ignore, but it's somewhere between where most people think it's going to turn around. They're wrong, the market pops, and I'm like, oh, Don must be so happy now. And then I talk to you, you're like, oh yeah, I fucking sold. I'm like, what do you mean? This is like peak validation for you. But I think like the sort of pattern there is a very low tolerance to sort of open P&L drawdown or volatility. Which is, again, technically a flaw, right? If we open the professional trader's handbook under the gut section or whatever else, there's you know, the big buckets are stuff that you subjectively care about and make your brain work a certain way versus the objective parameters of the trade. And I don't think everyone should just live in the second category forever. I think you naturally develop a sort of gut and instinct through tens of thousands of hours of screen time and trades, etc. That's definitely worth something. But this open P&L allergy you have to any type of drawdown, I think is very interesting. Oftentimes, the same type of mental illness that makes you your money is the same one that either loses it for you or precludes you from making more. That's kind of one foundational thing that I believe in. You know, like the same people who are up 10,000x and just held through the whole thing, that same mental affliction is the same reason why they can't just like close it or trail it out or do whatever. Like you sort of have to live through that on both ends of the trade. And I think in your case, the reason is, you know, the reason you're so good at buying bottoms and trading inflection points is actually the same reason that ends up forcing you to close early and not tolerate the drawdown once the position is open, you know?
I could see that.
I think often times, if people take a look at their own trading, whatever edge you have on the sort of entry and execution side, as favorable as it is, oftentimes it will come up in one way, shape or form in the trade management and closing side of it. And that's a very interesting pattern worth, you don't have to like fix it or do, you know, address it immediately, but it's a fun one to decompose. Like, what does my mental illness profile look like? It's like, okay, well, my mental illness profile makes me like allergic to drawdown. and allergic to big moves, and I can just fucking hold through anything, and I don't give a shit. It's like, okay, that's really helpful for sort of when you're right and you manage to catch a trend. Much less helpful for when things turn around and you refuse to sell. So like, how do you mitigate that? And on the other end, it's like, you know, in your case, for example, of like, I am fucking allergic to drawdown on my entry, and I'm going to be super precise. And then you look at your exits and trade management, it's like, oh, well, it seems even if when I'm right, that behavior persists. And how can I sort of optimize that or smoothen it a little bit to squeeze more juice from it, and so on and so forth. That's something I really believe in terms of like people's the patterns that make people money often come up in the things that either make them less money or lose them money downstream. And doesn't mean you have to like remove the whole thing and cut out the tumor. It's more of like, how do you manage the other half of it?
Yeah, it's quite funny though, like thinking about it. Like I'm like way too old to change this. This is always gonna just be.
Oh
Like,
yeah, dude, it's over.
Like I don't really care about it. And I also like, it's funny because back in the day this wouldn't have been how I think about it, but nowadays I kind of like I actually think like enough is enough. You know what I mean? Like it's like back then it's like it's just I'm like, oh wow, this is great. But now I'm like kind of like with every cycle I've been like, okay, if I catch like a good 25 to 50% of it, like I'm more than happy with that. I don't really care about getting the rest. So it's kind of like that's gonna be me in the like that's gonna be a thing that's gonna just be with me for the rest of my life, just because that's kind of how I'm used to it now. But also like if you're earlier in your trading career and you can kind of influence yourself a little bit more, probably worth looking at these kind of things before they become so ingrained that just becomes part of your personality.
Yeah,
Or
for sure.
maybe it's always been a part of my personality and I'm just kind of like enough is enough. And that's kind of like a thing that in life that is just for me like a thing that's been with me. Like enough is enough is quite often like
Yes.
it's something that I think and say quite often.
I
It's like, okay, cool.
completely believe this stuff is persistent and is derived of sort of semi-permanent personality fixtures that people have, and that's not something you can get rid of easily if you're a discretionary trader. Now, yes, you can you know, automate things and set harder guardrails, etc. So it is fixable, as you mentioned. But I truly believe the whole like, I mean, trading psychology as a category is pure fucking slop, right? Like if you don't have
Yeah.
an edge, you will just lose money due to transaction costs. There's the one sentence version. And so no matter how many like meditation Zen podcast audiobooks you listen to, it won't make edge magically appear and won't make you sort of make money. Where I think the psychology piece is useful is a more sort of knowing yourself and how your preferences and habits and what you reach for in times of stress are likely to come up and influence your trading. Like you just linked the enough is enough to your own trading, and that's a sort of general life type of principle. In my case, there's a very clear map, because once I get very sort of attuned to something and sort of obsessed with it, and it, you know, becomes a big part of my life, I'm a big fucking micro optimizer. You know, it's like, how can I make this 2% better? And like, it's not entirely clear that making something 2% better will actually lead to noticeable or visible results, but the idea that there's this 2% optimization that exists and I'm not capturing it is like an itch that I have to scratch. And that maps perfectly to this fucking low time frame management, right?
Yeah,
It's the
quite
same
funny,
thing.
yeah.
It's exactly the same thing. It's literally the same behavior that I have in other facets of my life of, you know, what incremental gains can I squeeze out for results that are redacted / unclear. And I still do that, you know, they're trying to fucking mitigate it in other parts of my life. But for trading, it 100% shows up in the same way. It's the same guy who's like, yeah, but there's like an intraday rotation that I can add to this monthly and get my average down. Or if I sort of scalp here and do this, it's the same fucking behavior. So I would suggest to people, you know, this not in a very sort of cringe way, but some amount of self-reflection as to how you behave and what patterns and modes you reach for, and then try to see objectively if it maps to a certain trading behavior, especially one that, you know, is costing you money or acts as a form of sabotage. And I think the results will be interesting, and something like this is likely to emerge. Like, you know, we didn't plan this shit. We just start recording and chat. It's like, hey Don, we're going to do a section on, you know, childhood trauma and how it manifests in candlesticks. You know, like that is clearly not what's going on here, but just through just like open conversation, there's a very, I think, a plausible map between shit that we do / believe / we're brought up with or whatever other combination and stuff that comes up with our trading. And that was on the fly. So I really do think there's some sort of link there that's interesting to explore, even if, again, the goal isn't to fix it or remove it completely. It's even know thy enemy is, I think, a useful outcome of that type of exercise. Also, we've not spoken about the market at all, but to be fair, is there fucking anything to talk about?
No, not really. No.
I think we've put a lot of lipstick on this pig, given the hand we're dealt.
Yeah, and I generally believe that with this kind of like your personality plays into your trading, right? That not everyone should trade the same way. This is something that I say a lot when I talk about like my trading. It's like, hey, you don't really need or should copy exactly how I trade, because if you copy it and you're just a different type of personality, you're probably not going to have much success with it. You can kind of like look at how I look at the market, or like how you look at the market, and kind of take from the experience and kind of take some lessons from it. But just generally, like the way you trade should really be something that corresponds with your personality, like where you can take advantage of the way your personality works. And I think that conversation is pretty much exactly like it's a really good really good look into why I say it. I've actually never really thought about it that deeply, other than like in this conversation just now. But it's kind of like, that's the reason why I say like, hey, like everyone is like an individual and just should be trading different based on how they are. Just exactly this. Like, you will have your own flaws, and the flaws can be like an advantage in other ways, and then you can just trade around that. And you really shouldn't be trying to focus a trading style that really doesn't fit your personality, because if you do, that's probably not gonna go so well.
Yeah, 100%. I think that's, to be honest, like there's the epitome of useful trading psychology is some version of that, where it's not about like altering your mind state or, cold plunges or whatever else. It's about sort of knowing yourself and mapping your trading to stuff that you find generally lower friction, as opposed to forcing yourself into a high friction area. And I think it also, in very practical terms, if you are the type of over managing, optimizing type of person, why on earth would you confine yourself to, for example, like monthly time frame stuff? You just won't be able to sit there. I mean, that is literally the anecdote of my experience, right? It's poorly handling the friction between what the demands of my personality versus the reality of the type of trading that I chose to do. And it works the other way around as well. If you're like a, super chill, I'll just like check in on this thing, not bothered. This stuff isn't deterministic. I'm happy with the risk and let it ride. And then you tell this person, no, bro, you can't do that. You can't just, trade the high time frames and check in, every week or every month. You have to get in and start optimizing your intraday trading and turnover and rotations, and try to get every little squeeze every single dollar from this market that you can at every single point. And that kind of behavior, I think that would be bad advice for that type of person. It would drive them insane, just as in the way of, if you take this intraday person who's like obsessing over intraday low time frame edges, you're like, bro, just relax, like just take a monthly trade and chill. It's like, what do you mean? Like, I'm stimming out at my desk here, like there's no way I'm gonna chill. So like a lot of trading advice, I think, is like harmful for that reason, because it doesn't take the personality friction into account. And just as a completely aside general point, have you ever noticed in these like motivational slop threads, when it comes to like, here are 5 rules, like if you look at them and read them, it's basically like, if you were to decompose them, the 5 rules are trend, momentum, trend. Like that's it. And then maybe something around sizing. Or a lot of these like trading wisdom things very easily decompose into either like some version of volatility-adjusted sizing and generic risk management stuff, or it's literally taking like a big bucket of market effects, like trend or momentum being the big one, and using some AI, intentionally or not, to transform them into like a single setup or system. Like there are no new things under the hood. And the new things that are under the hood are like intraday edges, which disappear within sort of 1 day to 1 week, if they're structural like that. So there's just a bit of like the fog of war when it comes to retail trading and shit is so massive. And I was fully captured by it too. You know, I'd fucking buy these courses in 2017. It's like, oh, that's how you draw the box. You know, like all those types of moments. Just pure
It's funny
shit.
that you say that, because I just 2 days ago, 3 days ago, made a video on this channel about how to draw support resistance.
Amazing. Well, at least you're not going to charge me for it.
No, it was free. And it basically, I said like, hey, this is just entirely depends on
Yes.
your view of where the market is gonna go and how it should be behaving, which I think is just the way this trading thing is. Like, people try to force it too much into this is the way to do it. And if anyone tells you like, hey, this is the way to do it, and charges you money for it, that person is a grifter 100%. I don't think anyone that's actually traded a bunch will say that there's one magic bullet. It's all just like you have to find your way. And everyone that has been successful trading has found their own way rather than having been handed it, I think.
I think that's right. Especially on the fucking TA side, right? Like, Jesus Christ, you're drawing a box or drawing a line and then generally looking for absorption and reversal or a break from balance at that line. That's it in a nutshell. Now obviously there's, you know, a ton of the devil's in the details. You can have the, you know, like if the best TA trader were to share all of his levels on Twitter for free every single day, most people would still lose money. Right? Sort of definitionally.
Yeah.
So clearly the edge isn't on how you fucking map the market. It's sort of what you do around it and how you manage your risk and sizing and trade management, every other thing. This fixation with, oh, this is the level, and if it does exactly this is the signal, is just a massive distraction. But it's also, I think the reason it's so persistent and effective is precisely because it's relatable. Like, you start trading and you're like, wow, well, this trading thing, how complicated is it? Like, you don't know what you don't know. And then some guys like, we just draw this box, and when this happens, you do this, you make money. But if this happens, then this happens, you do this, and then you make money. And it's like, oh, great, fantastic. Like, this seems very accessible. Let me get a new iPhone for my phone trading and figure this whole piece out. But yeah, listen, I think we've yammered on for a very long time. As far as the market on the whole, we talked about BTC being stuck in the same place, right?
Yep.
ETH USD is actually looks very similar to BTC now, with like this
Pretty much the same.
undersidey retest. ETH BTC breathed a little bit, but it's not some big fucking structural thing. It's just been going up over the last few weeks.
Which is surprising given all the other altcoins have been eating shit like
I
massively.
completely agree. It's just
Like,
the USD
look at
pair.
XRP BTC and compared with what ETH BTC has been doing. So there's clearly
XRP has not been having fun, huh?
Yeah, but Sol the same. Like, any BTC pair that you look at, you will see like garbage price action, and for ETH it's actually quite constructive.
Yes.
So I think that's quite notable on the relative strength side of things. But
we should start
it's
calling it absence of weakness. I think relative strength is just like gives off the wrong vibe.
It's kind of funny because that relative strength slash absence of weakness has taken ETH to exactly the same technical setup that I have for Bitcoin.
Yeah, like this weekly underside thing.
Yeah, we're just retesting it from the underside. So if Bitcoin breaks this, I think ETH's probably gonna break it stronger, and if Bitcoin doesn't break it, ETH's probably gonna dump stronger. So like, we might be back in the ETH is the leveraged Bitcoin kind of trade. I personally kind of like how it's setting up, but it's just wildly bearish still. So it does need a little push, but when if it breaks that underside retest, it starts looking quite constructive for the first time in a while.
Yeah, and you'd want the majors to all look that way. I mean, there are a couple of others, right? Out of the investable assets,
Solana did this. Solana did the same thing. It did the underside retest,
yes, exactly,
and then fucked off. But I think if Bitcoin breaks out, Solana might probably do it too. But that one's a little bit more of a stretch.
Yes.
But
dude, these charts haven't changed since the last episode. I mean, Solana did its underside retest where it was like, well, if you want the daily, that's fast, but the weekly's at resistance. Turns out the weekly was at resistance, and it's sort of ping-ponging between, 70 and 80. Hype is also in the same place, the sort of daily range low we talked about, where the macro range is between 55 and sort of 70s. Took a stab below, reclaimed, which is a pretty decent structure. But overall, like it's absence of weakness or some evidence of absorption as opposed to strength. Zcash hasn't really moved all too much. It's still in this post-exploit choppy range, but in terms of, again, absence of weakness, it's still hugging around the highs,
I agree, yeah.
which is notable. But I think that's like mostly it. This whole, you kind of open up crypto at the moment and you're like, yeah, it's kind of hanging on by a dick hair, and you can make the arguments about sort of levels and whatever else. But I think, absence of weakness, relative strength, but I think sort of volatility, death plus summer seasonality really is the main theme. And then it's like, well, let's see what September and October look like, and sort of Q4 tends to pick up a bit in terms of vol. I think that's big picture what's thematically interesting. Like if you spent your summer trading this chop, God have mercy on your soul.
Yeah.
Cool. Right, should we wrap?
Yeah, you want to start a wrap?
Let's do it. I mean, hopefully we'll have something more interesting to talk about next week, which is definitely when the next episode will come out, because we are responsible, consistent stewards of this highly acclaimed show. Before you click off, make sure to like this video and subscribe to the channel. Hope you learned something. If you have any preferences either on format, or if you want more or less of this type of content, appropriate responses range anywhere from shut the fuck up, you chart monkeys, start drawing, all the way to, hey, this is actually quite useful and I learned something. Please let us know, and we will adjust accordingly. Thank you to Kraken Pro for supporting the show. We kicked off the episode by sharing their gold and silver perps trading competition. That's worth a look, especially if you're on the smaller to medium account size type of part of your journey, where you're looking for these sort of asymmetric opportunities. These exchange sponsored trading competitions tend to be far less competitive than you would ordinarily think. So at least take a look. If not, sign up to Kraken Pro anyway via our link to support the show. It's good exchange, been around for a while, positively paranoid about security, have a bunch of tools across pro and consumer and all their other interfaces. So be sure to check them out. We should probably talk about custody at some point, Don, maybe next week, given the cold card hack, which we didn't even get to because we were too busy being pseudo-intellectuals.
Yeah.
But I don't know, what, split it across exchanges, maybe a piece of paper with some friends and a multi-seed, God knows, a multi-sig, sorry, God knows, we'll sort that piece out later. Enough rambling from both of us. Hope you all have a wonderful weekend, and we'll see you next week.
Bye-bye.